Morning Trade Pros, welcome to Morning Market Update for this beautiful Tuesday, July the 9th. It's still 2019. In today's Morning Market Update, we're going to talk about a few things. Let's kick it off by using a little Morning Market Fun Fact. Now, this is a little bit of a longer Morning Market Fun Fact than usual, but markets are a little bit slower these days. They're resting for the summer holiday, and we have gotten into summer-style trading, so we'll have to adjust our strategy slightly. However, the Morning Market Fun Fact is this. The 20 most active tech companies on the buyback scene, so of the companies that purchase or repurchase their shares on the open market, the 20 most active ones spend a little bit over $261 billion over the 12-month period that ended with the last quarter, all right, which is about 40% of the total dollars spent by the 100% largest companies in the S&P 500 over that time. So a lot of the money of just 20 companies is accounting for a 40% stake of the total money spent of 100 of the companies. And what that tells you is this. It tells you that companies are taking money and buying their own shares rather than innovating. All right, Marky, do you want to show that? You should. We ordered some beef jerky, and behind the camera, here, Vicky, show it on the camera. We got a little bit of beef jerky here for the office. This small bag. Where is it?
I don't know.
Can't open it. The size, yeah, this is all, look at this. Dried, organic beef jerky.
Oh, wow. 100% beef.
Probably wasn't a good idea to put that in my mouth. Anywho, the largest few accounted for the lion's share: Apple, Oracle, Qualcomm, Cisco, and Microsoft spent a combined $175 billion over the past 12 months. All right, and that's triple their combined total for the same period 2 years ago. So we know that companies are increasing the amount of money that they're buying back stocks with, which is really providing that open market support. You're asking who's buying the stock market? It's the companies themselves. All right, Oracle's buyback in the last year are 3 times their free cash flow. Think about that. What is free cash flow? After basically paying all your expenses, having your net income, whatever you have in cash, right? It's considered free cash flow. So they're spending triple their free cash flow in the last year in buybacks. And you're going to say, well, how is that possible? How can they spend more cash than they have? This all goes back to a 27 tax legislation change by the Trump administration that introduced the ability to bring home money from abroad, all right, into the United States with very little to no tax. And that new cash being repatriated or being brought home is being put into the stock market for companies to buy back their own shares. The one downside of buybacks is this, all right? The good thing is it supports the market. The downside is it stifles innovation, all right? It's cash that could have been put to use for the company to develop their products and services and deliver growth in the future, but it's growth today at the cost of future innovation. And that's what a lot of people miss out on. It is a way of rewarding shareholders. It's kind of like a dividend, but we're going to do a separate YouTube video on what stock buybacks are. Biggie, it's a great topic. Jerome Powell stepped up to the starting line today for a huge Federal Reserve week. Let me put this beef jerky down. I'm waving this thing around like at the end. I'm going to be like, sponsored by Azalea. What's a beef jerky company? She doesn't know. Oops. Jerome Powell stepped up to the starting line with a marathon of speeches over the next 3 days. All right. Ranging from the Boston Fed president to his semi-annual monetary policy testimony to Congress, which starts tomorrow. He testifies in front of the House Financial Services Committee at 10 a.m. Today, he gave some remarks at a conference discussing the bank stress tests that the Federal Reserve releases. So basically, the Fed tests banks and stress tests them under certain conditions for liquidity and then post those results. Last time around, all of them passed the stress test. All right. But Jerome Powell did just say this morning the following. He basically said everything's good. Bank stress tests must evolve to avoid complacency. So all he's saying here is there are going to be changes to the stress testing rules, but he does not address monetary policy in his opening remarks as expected. So we knew Jerome Powell wasn't going to talk about interest rate cuts or any monetary policy tools or vehicles that they use. So all in all, it's a non-event. However, this morning as well, we had a tweet from Donald Trump saying India has long had a field day putting tariffs on American goods. This is no longer acceptable. So the market is feeling a little bit nervous this morning, wondering what's next from the Trump administration. Is there a new round of tariffs against a new country, etc.? All right. The market itself right now is sitting in a little bit of complacency. We are at or close to all-time highs, having recently hit them. And I think at the moment, we're just kind of sitting sideways and consolidating. All right. We're holding these levels, which is pretty bullish. All right. But we are due for a pullback, and that's happening as they speak. Markets are giving back some of the gains, but all in all, we're an uptrend. The question is this: is the next move going to be to fresh all-time highs again, or are we going to get a deeper pullback here and maybe even a 10% correction? I will say this, though. During the summer, markets don't tend to make massive moves, so it would make sense if we just consolidated and had a little bit more subdued volatility movement into the end of August, all right? And beginning September, markets pick up again. Except this week is very volatile, especially tomorrow and Thursday. We have oil. We have Jerome Powell testimonies on Wednesday and Thursday. He's going to be asked questions by Congress and the House, all right, of Representatives, and that could cause a lot of stir in the market. So watch for that. That's the main event of the week. Then we have inflation data Thursday morning, which further has meaning for monetary policy, etc. All right. What else? That's where we're at today in the markets. I'll give you a few quotes around the globe. In Asia, Japan's up 0.1%. Hong Kong's down 0.8%. China's down 0.2%, and India's flat. And in Europe at midday, London's down 0.3%. Paris is down 0.5%. Frankfurt's down 1.3%. In the United States, Dow's down 0.4%. All right, S&P's down 0.4%, and Nasdaq's down 0.6%. Crude oil. So as you can see, all markets are down across the globe, but to a small extent, Nasdaq leading the way. Yesterday, when Nasdaq was weaker, all right, what happened? It pulled the markets down all day. It was a good correlation leader. Today, Nasdaq is weaker once again. Watch Nasdaq. If it continues to sell off on the open, equities will probably follow. We are looking for a bearish pullback day. So we're going to be trading on the short side to start, and then we're going to allow the bulls to prove us wrong. And if they do, we flip to the long side. There's no problem in switching your bias. You don't have to be right on the direction. You have to be right on the trade. Big difference. All right, crude oil is up 0.7% this morning. Gold's down the same. Bitcoin up 3.2%, trading over 12,000. At 10 a.m., we have JOLTS, job openings and labor turnover survey, Fed Bullard speech as well, and results of a $38 billion three-year note auction, and also Fed's Bostic speaking at 1 p.m. All right, 2 p.m., Fed's Quarles is speaking on stress testing, a discussion review, the same conference that Jerome Powell just opened up. All right, so that's that. I hope you guys have a wonderful rest of your days. Enjoy your day trading today. Manage your risk. Trade like a TRADEPRO. And we're about to turn around, open up the trading room for today. It's a beautiful Tuesday, July 9th, and take advantage of the market opportunity. All right, guys, see you later. Have a great day and all the best. Goodbye.